Hi folks, Dan Bird here with the daily scan for Friday, May the 2nd. I am still on my road trip. I know I missed the last 2 days. Sorry about that, but I was in the car driving, so hard to do a video while I'm driving, unfortunately. And the market's open right now, so I'm not waiting until the close. I'm not sure if I'll have time later today. At any rate, jobs came in. Tame came in higher than expected for the number of jobs, and the unemployment rate came in at 4.2, which is exactly what I said it probably would. So all of that implies that the economy is still strong, and the Fed likely will not cut next week on May 7th. They don't really have any reason to at this point. So let's take a look at a couple of things, and I'll try to get caught up. So again, I'm not a financial advisor, so anything I say is for educational purposes only, and I'm not going to make recommendations to buy or sell anything. Let's take a look first at the market bias chart. It actually was going up the last few days, and then yesterday actually came down slightly. I suspect this probably will either go flat or might reverse and start to go up a little bit after today. We'll see how the market ends. So it was up to start the day, but the close is the important thing, especially on Friday. So we want to close that will be higher than the open. So that's the thing to watch for by the end of the day today. Let's take a look at the indexes, the S&P. Sure what it's doing right now. So okay, so it's starting to go back up higher again. So you can see right here, it got above the downtrend line. The last time we talked was back over here. It's a little bit bigger. And right after it had broken through the downtrend line. And then 3 days ago, so this would be Wednesday, this one right here, it opened lower. So it went down, actually went right down to the support line that actually had been drawn in there quite a while ago, and then reversed and closed higher. And this is what I mean by watch the close. The close is going to be the important part. So this day it gapped down, opened, and continued to sell off. It looked like it was going to go down and start putting in some lower highs, but instead it finished the day much higher. The next day, yesterday, it did the opposite. It gapped higher and then sold off by the end of the day and actually had a little bit of a shooting star. So it was really dependent on that jobs number. The jobs number came in positive for Wall Street, so the market is starting to move higher. Watch to see what happens by the close today. The NASDAQ, same thing. So it looks very similar. Sold off 2 days ago, came all the way back and closed higher than the day before. And then yesterday it gapped up and then sold off. So it's got a black candle, which means it closed lower than it opened, however, higher than the previous day. That's what makes it black. So that really is dependent on the next day for confirmation. That's today, and the confirmation is that the market looks like it's heading higher. Now it's heading up to the 200-day, which I expect to see some consolidation or even some pullback a little bit at the 200-day right up here. Let me move this death cross up a little bit. So that's what I think probably will happen. And by the way, if this 50-day gets back up and crosses over the 200 again, that will be a golden cross instead of a death cross. But it's got a ways to go. The price is probably going to have to get back up here near the high before that happens. So that's where we are. Everything's actually looking pretty good. The Bitcoin, see what that looks like. Bitcoin started to take off yesterday. So it broke out of that sideways consolidation pattern. I said that that was building up energy, probably would explode higher because I think it wants to go to 100,000 again. And it's moving up and starting to get there. So I think Bitcoin probably will continue higher. I think we actually are in a pretty bullish trend right now. I'm going to show you the comparison here in a minute. Russell 2000, that looks the same as the others, except it right now is right at the 50-day moving average. So if it closes above it, that's going to be very positive and actually pretty good for the small caps and mid caps. So they may be perking up and coming back alive. Now it has to get above this level right here to break through that resistance, which is at about 206 7, let's call it. But right now, everything looks really good. It actually looks like the small caps might be outperforming, might be doing better than the index itself. All right, so let me take a look. Let me show you first where I'm at, since I was updating this before. And here's my trip so far. So Lake Linganore was the last time we talked. That was over here. We left Lake Linganore yesterday or 2 days ago. Went to Roanoke, Virginia. That's in the southwest corner of Virginia. And then left there yesterday and arrived here at Lake Murray. So we are on another lake, another friend of mine that has a house on a lake. So we've hit 3 lakes now. And we're going to go back to the first one again tomorrow. So right now we're right down here in South Carolina, right outside of Columbia. So anyone has been near this route, give me a shout out in the comments section. Let me know, how close we came to where you are. So that's where we traveled yesterday. Tomorrow, Saturday, we will take a short trip straight across South Carolina and Georgia, go right through Augusta, where the Masters is played, and arrive back in Lake Lanier again with my friend on the lake there, and we'll be there on Saturday. So that's where the journey so far has taken us. This is really interesting. I've shown this before, and a subscriber asked if I would continue to do this on each session. So this is the comparison between 2022 and 2025. You see in 2022, we had a 12% rally. Also in 25, we were about 5 or 6 weeks behind 22. 22, the decline started in January, and 25, it started in mid-February. So we're about 5 or 6 weeks behind, and this was the rally, 12% rally right here. Right on cue, we started a rally in 25, and this is the 12% level. We are above that now. So we may have broken the pattern from 22. This may no longer be a similarity with 22. We'll see how this plays out in the next few days. But right now, we have definitely broken the pattern. So is it the same as 2018, which is the last time there was a trade war? Here's the 2018 chart updated to today. And what you can see now, and this box was drawn where the higher low came in 2018 right here. Oops, can't do that on PowerPoint. So there's the higher low right here in 2018. Here's the higher low for us in 2025. It continued to go higher, and you can see it went back up to all-time highs, recovered all the way back up, a nice V recovery. That looks like what we're doing again this time. So we may actually be following the 2018 path rather than the 2022. And if this continues like this, then I think we're definitely heading maybe back to the highs again. So be careful with all of the doom and gloom that you hear out there that it's another recession, we're going to have another 1929 crash and all of that. We are in a secular bull market, which is going to probably continue till 29 or 30 or somewhere in that neighborhood. I think that if we do get a recession, and it's pretty likely that we might, I think it will be short and shallow, won't last very long, and we will continue to go back up to the highs again. So that's what I see just looking at the data, looking at the charts. So just to highlight that, I'll go back to the homepage of the website, and about halfway down is the secular bull market. And this has happened for the last 100 years. Make this a little bigger. You can see the current secular bull market officially began in 2013 when we broke out of the previous highs. Some like to started from 2009, but you don't know if it's going to break out until it does, which was in 2013. And secular bull markets typically last 18 to 20 years. So we've got till 2029 to 2033, even though we came down right to or very close to this 200-week moving average, which we did in 22. We went below it for COVID, but we never closed below it. This is a monthly chart. And we have stayed above it through this whole secular bull market period. Right over here on the right-hand side, you can see the zoomed in version. This is a monthly, so this is for April, that big red one. Came all the way down, but did not go below the 200-week moving average. And now we've come all the way back up again. We're almost back to where we started April and getting very close to that point, in fact. So even though a lot of the momentum indicators have rolled over and imply that they could still continue down, and they certainly could, we'll see if that happens. But this one here would have to come all the way down here to the 0 line. And this one here would have to come all the way down here to the 40 line in order to tell us that the secular bull has been broken, and they are not anywhere near that yet. So we've still got more to go, and I think we probably are going to come back up to the highs sometime later this year. We could have another leg down over the summer, so we'll see. So on that topic, let's go back to the charts page and take a look at the jobs. I wanted to show this yesterday, but before the jobs number came out, but I was traveling and couldn't do it. So here's what it looks like. And you can see there was a big spike this week in the number of claims. So that spike was not enough to overcome the low claims that were there before, which is why the rate came in at 4.2, pretty much the same as it was before. So it didn't spike higher and didn't spike lower. But if these claims continue to go up, which I suspect they probably will, next month they might be higher, then that 4.2 unemployment may start to creep higher as well. However, right now, there's the yield curve. You can see it's solidly above 0, and consumer sentiment is still pretty low. But when consumer sentiment gets this low, that's usually where we get a bottom in the market. So unemployment rate came in just as I thought. Because of this, next month it may start to tick higher. But because of this, I don't think the Fed is going to raise or cut. I don't think they're going to do anything next week on May the 7th. And one of the primary reasons is if we look at CPI, which comes out the week after, May 13th, I believe. A big one is dropping off, the base effect, the 12-month window for CPI. When a big one dropped off last month, we got a drop from, let me bring this back in a little bit. So we got a drop from 2.8 to 2.4. The forecast was 2.5. We actually came in lower than that. So 0.4% drop because of this big one dropping off and inflation being tame. We've got another big one dropping off in May. This could potentially get down close to 2%, especially if the commodities continue to fall. So this is going to just confirm what I have been saying for quite a while, that tariffs are not inflationary. This is going to confirm that. The CPI and inflation will look like it's dropping off a cliff when it comes out in 2 weeks, and we could be close to 2%. However, June and July, you can see these very small ones that drop off. And when small ones drop off, it will make the front end look like it's going higher. So these two will appear that inflation is creeping back up again. We'll be back. We could be back up to 2.4 or 2.3, something like that, maybe even 2.5 in these 2 months. And the Fed does not want to cut on this one, only to have to raise again in June and July, even though they know that it's temporary. Because look at the big ones that drop after that. So after we get through June and July, we start to get into the fall. Inflation is going to continue going down. In fact, there's a huge one over here sometime next year. But towards the end of the year, I think we're going to have a big rally and we'll be back to all-time highs again, regardless of what all the doomers say. That's what I believe is going to happen. All right, so let's take a look real quick at the bottom finder for the NASDAQ. Since we haven't looked at that lately, you can see that percent of stocks above their 20-day are now at 92. The 92 of them, 92% of stocks are above their 20-day. Back here when we hit the bottom, this vertical line shows you the bottom. This bottom finder works really well. It was at 0. And down here on the 50, it was at 4. And that now is at 60%. So all of these are moving up significantly. They're actually getting into close to an area where we might get a top. We might get a reversal. And you can see the NASDAQ 100 is right at the 200-day moving average. So I would expect, I think today we're probably going to be okay. But I suspect that maybe next week we're going to start to consolidate and move sideways a little bit. We'll see what happens with the Fed meeting coming up on May 7th. I don't think they're going to do anything. VIX is continuing to go down, put call ratio continuing to go down. So everything, like I said a couple of days ago, the market is A-OK, continuing to go higher. All right, so let's go look at the dashboard real quick. And what we can see here is the Dow. This is for today, so the market's open right now. The time is 10:25, so it's been open for about an hour. Had a big gap up, pulled back a little bit, and started to go higher again. So we'll see how this closes. I suspect it might kind of go sideways, but it gapped up and then goes sideways. That actually might be a good thing. Consolidate and build up energy. You can see the VIX now at 22, still not below 20, but it's getting there. It's heading that way rapidly. 10-year ticked up slightly today. It's been ticking up since yesterday as well, but still not too bad. And the US dollar is going down, which is a good thing. Commodities, this is the key also for inflation. We want commodities to continue to go lower. Gasoline went down a little bit and oil went down. So that is liquidity in the system. And then crypto, of course, Bitcoin at 97. It's rapidly getting to that 100K target that I mentioned last week. And I think it's going to get there, most likely. So for today, so far, industrials, financials, technology. So it's a mixture. We've got one aggressive near the top, communication services aggressive in the middle, and then discretionary aggressive a little bit below the middle down there. Lots of advancers. So everything looks green. Everything looks good today. Here are the earnings reports. Apple reported. Looks like they beat slightly, but they're down a little bit. Airbnb flat pretty much. Amgen had a big sell-off. So Amgen actually had looks like a good report, so they must have guided lower. So Amgen is heading lower. Amazon is pretty much flat for the day. Biogen flat. Dexcom is the one that did really well. So it's breaking out. It's got an inverse head and shoulders pattern with a target of, let's see, roughly about, let's call it 70, 12, let's call it about 85, target of about 85 on Dexcom. Exelon pretty much flat, and MicroStrategy reported it's pretty much flat as well. So MicroStrategy is a proxy for Bitcoin, so it should pretty much follow along with Bitcoin. And the only one on the next page, which is Tame, Atlassian, looks like they missed, down 9% on their earnings, and the stock is down today as well. So that's the status of those. The industry groups, anything interesting in here? Software is number 10. Airlines is number 1. So if we go back to the website, to the charts page, we can look at software, which was in the top 10 last week. And the number 1 names today for software, Duolingo, up 15%. This is just for the day. Riot, which is a miner, up 8% for the day. That should be expected. AppLovin, which has had a really good run, up 7% on the day as well. And we can go back 1 week. Anyone that has a subscription can click on these and look at these kinds of things. Duolingo for the week is up 20%. Anything else in here? Nothing else that jumps out at me. So the other one was airlines. Airlines over here. JetBlue up 6% today. Allegiant up 6%. Alaska down here up 5%. This is just for the day. United is up. So all the airlines look pretty good. Southwest up 3.5% for the week. JetBlue, huge, 20% up for the week. Southwest is up big. Alaska is up big. So airlines look like they're doing pretty well right now. All right, so one more thing I want to show, which is liquidity. I mentioned this briefly. Let me bring this in a little bit. For those that are on the website and you get these things off the edge of the screen like that, it just means you're too close in. So I'm doing Control minus. I'm on a Windows machine. It's Command minus on an Apple machine. And that just brings it back in, pulls everything in so you can see it. So liquidity is right here. in the middle column. And liquidity is a combination of the US dollar, which is still low and actually going lower. 10-year yield is going lower. Oil, definitely going lower. Commodities going lower. So all of these things going lower means there is more liquidity in the system, especially the dollar. So it's a good thing for the dollar to go down. Usually when the dollar starts to decline, it's about a 10 to 12 week lag before the market takes off. And that's exactly where we are right now. So with liquidity, with more liquidity in the system globally, that means that the stock market should benefit, assets in general should benefit from that. So that's what we want to watch. We can keep an eye on this particular chart and watch all of these things and see what they're doing. You can also look at the commodities chart, which is right here. And commodities are what will be reported on the 13th with CPI. So you can see right here, this highlighted area is what will be reported in the CPI. And what we see is commodities dropped off a cliff and then they came back, but they are now moving lower. And I'll actually, now that we're well into the month, actually the month is over. You can see that this one here, DBC, which is these commodities over here on the left-hand side, that is the trend for April. Let's look at this one here is copper. So that's the trend on copper for April. This one is DBA, which are these commodities, mostly food commodities. Trend on that one is slightly up. Then we can look at CRB, which are CRB started up here. And that is decidedly lower. CRB are these commodities over here, agriculture, energy, and metals. And then the important one, which is oil, is this one right here. That's where it started the month, and this is where it ended the month. Considerably lower, dropping off a cliff. And this is gasoline. Same thing for gasoline, going much lower. So all of this implies that we are going to have, not only going to have a good CPI number the week after next, but that inflation will look like it's dropping off a cliff, contrary to what everyone in the news wants you to believe, that tariffs are inflationary. They are not inflationary, but this is going to prove it when we get that CPI number in a couple of weeks. So that's where we are. Hope everyone's doing well. Sorry for missing the last couple of days. I hope we're going to be traveling again next week, so I may miss some more, but hopefully I can keep everything updated and let you know what's going on or what I see in the market. If there's anything that you would like for me to look at, let me know, and I'd be happy to do that. In fact, now that I mentioned that, I'm actually going to go to the YouTube channel because there was a stock. By the way, if you want to learn about Bitcoin, I've got a whole session on Bitcoin in the playlist, my playlist down here. But this one right here was the last one I did. Markets look A-OK. They are still looking A-OK. But there was a stock that someone asked me about, Z-Tech. So let's take a look at Z-Tech. I don't know what that company is or what they do, but we'll see what the chart looks like. So it looks like they've had a pretty good run. It is non-ferrous metals, some materials. So it's kind of following gold. Gold, by the way, has been pulling back lately. Right now it's consolidating, it's going sideways. It's only $1.67 stock. So this is a penny stock, huge volume down here. So I don't know what's going on with this. Maybe the person that asked about it can give us some insight, but you can, let's look at it on a weekly, longer term. So it's got a lot of work to do. It's right at the 200-day right now. So it needs to get through that 200 week. I'm sorry. This is a weekly chart. So it needs to get through that to really make any more headway higher, but it certainly looks like it's taking off. So it started down here at 50 cents. And right now it's at $1.70. So that was a good run, but it may continue higher. Very interesting. While I'm here, let's take a look at gold. See what gold looks like. So gold had a shooting star. This is a weekly chart. So shooting star candle last week, which is a reversal, and it is heading down now this week. If we look at it on a daily, you can see there's the sell-off on gold. Looks like it will probably continue maybe down to the 50-day. So if anybody is looking to get in or add to their positions, you might have an opportunity somewhere down in here. Maybe even right now, it's at the 21 right now. That's what typically it's come down to, and then bounce back up. But gold is pulling back right now. And I think on the market bias matrix, I think silver was one that gave a red. Lithium gave a red, but silver also gave a red on the medium term. So that's silver right here. You can click on any of these buttons and see the chart. So you can see right there, silver has both a short-term and a medium-term down signal. So that implies that there probably is more downside left in silver, probably down here to around the 28.50 area. Right now it's at 29.26. So it looks like silver is pulling back for sure. All right, that's it for today. Thanks for watching. If I can do one after the close, I probably will. Let's actually take a look at where things are with the close. You can do it right here. There's the S&P. Looks nice. So S&P still going up. You see the 200-day right there. It's right at resistance. So I expect there to be a pullback when it gets there. Perhaps consolidation sideways, which would be healthy before it pushes through and goes back up to the highs again. So remember that when you hear all the doom and gloom saying that we're back to a 1929 market crash, we are not. We are probably going to make new highs at some point. If not this year, then probably next year. And then everything might crash after that, but not yet. I think the doom and gloomers will be correct at some point. Their wishes will come true, but not yet. So they will continue to say that we're going to have a 1929 crash until we have a 1929 crash, which could be 4 years from now. And then they will yell and scream that they were right. But of course, you will have missed out on a huge opportunity if you listen to them. So that's where we are right now. Thanks for watching, and stay safe, and I'll talk to you soon.